Tax Rules for Dependents and College Students by SK Tax Associates. Filing taxes when dependents or college students are involved can be confusing, especially when determining who qualifies as a dependent, who gets to claim tax benefits, and what credits are available. Here's a guide to help you understand the key tax rules for dependents and students in 2025. The IRS recognizes two types of dependents: qualifying child and qualifying relative. A college student under age 24 who is enrolled full-time for at least 5 months of the year typically qualifies as a dependent child, as long as they are your son, daughter, stepchild, foster child, sibling, or a descendant of any of these. They lived with you for more than half the year. They did not provide more than half of their own support. They are a U.S. citizen, national, or resident alien. Note: if the student is married, special rules apply and they may not be claimed unless they don't file a joint return. Yes, a dependent college student can file their own tax return, especially if they earned income from a job, have federal taxes withheld from their paycheck, need to get a refund. However, they must indicate that they can be claimed as a dependent on someone else's return. Otherwise, the parent or guardian may be unable to claim education credits or exemptions. There are two key tax credits for qualified education expenses: the American Opportunity Tax Credit, worth up to $2,500 per eligible student. It covers tuition, books, and required materials. 40% of it is refundable, up to $1,000. And it's available for the first 4 years of post-secondary education. Then there's the Lifetime Learning Credit, which is worth up to $2,000 per tax return. It covers tuition and fees for any post-secondary education and is non-refundable. Only the taxpayer claiming the student as a dependent can claim these credits. If the parent claims the student as a dependent, only the parent can claim the American Opportunity Tax Credit or Lifetime Learning Credit, even if the student pays for tuition. If the student is not claimed as a dependent, they may be able to claim the credit on their own return if eligible. Scholarships are generally tax-free if used for tuition, fees, and course-related expenses. However, any amount used for room, board, or non-qualifying expenses is taxable. The student loan interest deduction allows up to $2,500 per year in interest to be deductible, even if you don't itemize. This deduction can apply to either the student or the parent, depending on who is legally obligated to repay the loan. And don't forget about 529 plans. Withdrawals used for qualified education expenses are tax-free. Just make sure to coordinate with other education credits to avoid double dipping. Understanding how the tax rules apply to dependents and college students can make a big difference in your tax bill. To maximize your savings and ensure compliance, consult a tax professional. At SK Tax Associates, we're here to help families navigate education-related tax benefits and make the most of every opportunity. Contact us today for personalized assistance.